right? So I'm gonna show you guys two things, right? You guys at this point, you already know, um, these two things, right? One, highs and lows. Two, market structure, right? So we know that the market works in two ways here, right? Highs and lows, market structure. Simple, right? We use highs and lows, right? Something like this. These are our highs, these are our lows. That's our new low because we broke previous high. Okay, we broke previous high, that's our new low. We broke previous high, that's our new low. We broke previous high, that's our new low, right? This is called an uptrend, correct? So if for an uptrend to be invalidated, what needs to happen? The previous low needs to break, right? And this is for an uptrend to be invalidated, okay? So let's say we're in a downtrend, right? Lows, retests, breaks the previous low, retests, breaks the previous low, retests, break the previous low, retest it. Now question, for a downtrend to be invalidated, what needs to happen, guys? See if you guys do better than the fucking mentees. High needs to break, exactly. The previous high needs to break, right? And then the downside is invalidated. So in simple terms, we understand highs and lows, and we understand market structure. A market structure shift is what we look for to be able to what? To play in a direction we want it to be. So if you're looking for upside, you need the market structure to shift back up. If you're looking for downside, you need the market structure to do what? Shift to what? Downside, right? Very, very simple. Everyone understand that, right? So we're going to go over the trade we took today, and I'm going to show you guys are going to learn how to properly find risk management, because the number one question I get asked all the time is, how do I know where my stop loss level is? How do I know where my take profit is, right? Can I see some ones of how many of you still get confused on where to take profit, where to stop out? Right? So the simple thing of this, it's literally, if you know your highs and lows, you literally know your stop loss and take profit. Your highs and lows, the reason I teach highs and lows the very, very first class whenever I teach a mentorship is because the highs and lows is the key and the foundation to the whole strategy and to everything. Highs and lows identify a market structure shift. Highs and lows identify take profit and stop losses. Highs and lows identify uptrends or downtrends, right? So I need you guys to understand it and keep it very, very simple. So let's just go over today's trade, right? If we go over today's trade, I believe it's like 2200 some shit, yeah, around here. Okay, so like I told, here we're gonna start like fresh, like I didn't talk to anyone today. Okay, so we knew that the 4 hour, right, the 4 hour low right here broke for continuation. Before I even do this, let me give you guys a little cheat code. If you guys are still struggling with highs and lows, I want you to do me a favor. I want you to grab any lowest point or any highest point in the market, and if it's from the highest point, work your way forward, or it's from the lowest point, work your way backwards, right? Now what do I mean by this? If you work your way backwards from the lowest point, you're going to, this is already lower. So what does that tell you? If this is lower, that means it had to break a previous what? If this is lower, it had to break a previous, no. If we're lower, right? How can we get low? How can you get downstairs? You go down one floor, right? So if we're lower, that means we broke previous low, right? Okay, so then that means you need to follow it up to find your previous what? You need to go backwards to find your new high. Good job, right? So that's the cheat code. Find the lowest point and work your way backwards. And here you start forward. Okay, so let's go here, right? Let's, for instance, we know we broke this low, then we came down, and then we pushed up. Okay, so then this tells me this was my high here, right? This was my high here, and then we continue to break below this low here. Okay, and then what happened here? Did we break above this high? Yes or no? Yes, right? Okay, so then that tells me that this 4 hour here, we're currently bullish internally, right? Okay, cool. But then external is here. This is the last up move that caused a break here. And as you guys can see, we could not get above this high. So this here is my 4 hour high here, right? And as you guys can see, we had the monthly open here and the high. We couldn't get above it. Okay, so then I know that on the larger time frame here on the 4 hour, I'm currently bearish. We can't get above here, okay? So then if I break it down into my 1 hour time frame, let's look at the 1 hour, right? Let me slow down a little bit. If I look at my 1 hour time frame, it just looks like shit here. If I'm being honest, it just looks like complete crap. But like I said, if we can grab the lowest point of the chart and the highest point of the chart, work forward or work backwards, we'll find our what? Lows and highs, right? So let's just say I want to take this lowest point here. Okay, let's just say I just draw a random ass line here. Let me follow this backwards. Okay, this went up and this went down. Okay, so we went down here, we went lower. That means we had to break a previous what? We had to break a previous what, guys? A previous low. Okay, so then if we follow this back, we can just look to our left. Where was our low? Here, right? Okay, so if we know this was our previous low that we broke, we now have a new what? A new high, right? So then we mark up our high, which is the highest point before the break, right? Okay, cool. And as you guys can see, reject it, reject it, reject it, reject it. It just couldn't get above on the hourly high, right? So what does this tell you on the hourly? Is the 1 hour bullish or bearish here? Bearish, right? Okay, cool. All right, so then what can you do? You can either wait for the low, which is down here, the lowest point again, to break for what? For continuation, right? Okay, which we did. We knew that we broke the low here for continuation. But then what happened today? We saw the break down here, right? But we saw the break up here, back up. So this is why I was cautious today, right? We saw that the 15-minute had a gap here that we said it could bounce off of, and it did. It had a nasty break above, but then it broke back above on the hourly, right? Okay, but then what remember, what is our 4 hour? Our 4 hour is bullish or bearish? You guys remember? Bearish, right? Okay, so then if it's bearish, we look for bearish confluence, right? Meaning we'll look for bearish evidence and such things as well. What's the 4 steps? Step 1 is a break, step 2 is an order block imbalance, step 3 is a fibs, and step 4 is what? A retest, right? So if we go back into our 4 hour, knowing our 4 hours bearish, look what it left behind on the 4 hour, a bearish imbalance here, right? And then your bearish order block here. Okay, so step 1 is a what? A break, right? Okay, cool. So we can mark this up here as our bearish imbalance. I can even take my fibs from the high to the low of the 4 hour and see if we can get a retest, right? Or we can go down into the 1 hour, and we know that we have a gap down here. We can take the fibs from the hourly high here to the hourly low here, and look at that. What do you have here in this zone here? Now, before I even get ahead of that, let me explain something, because this is going to be a question. You guys are going to be confused. Well, Jordan, why didn't you take your fibs from this high to this low? Who can guess why this wouldn't be valid for me? Even though this was the high that caused the break, what don't I have there? No imbalance, exactly. No other piece of evidence. So remember what I say, when you want to take a trade, you want to find as much pieces of evidence or confluence as you possibly can to validate that theory, right? Because trading is all just a theory. You want to kind of feed yourself that delusion and that theory. Okay, this should work here because of this and this and this and that, right? You just line up shit together. So in this instance, there's nothing for me here on the hourly, but I do know that we have a 1 hour imbalance, but most importantly, I know we have a 4 hour gap here. Okay, so then I can just draw my fibs from this high to this low, and that's my optimal. Okay, cool. So the first things first, we knew that we have an optimal here on the hourly, right? Let's delete this. Now we go into smaller time frame to look for what? A shift to the downside, right? Okay, mind you, 15-minute held, popped, broke the 15-minute. Is a 15-minute bullish or bearish here? Exactly, bullish, right? So would I be looking to short this? No, right? Until what? What do you guys think is a correct answer for me? A shift, exactly. Okay, so then I can go to my 5-minute, okay, and I can see my 5-minute, it's all the way down here. The low that caused the break above this high is all the way down here. So then that tells me I have to play this aggressive, right? I have to keep an aggressive tight and play this trade aggressive. So then I go into my 1-minute time frame, right? So, but also remember this, don't be afraid to take trades on the 1 minute, because are you taking the trade on the 1 minute? Yes, but you're taking that off of your larger time frame setup. Does that make sense? This is all a 4 hour gap. This is all an hourly optimal, and this is your 1 minute shift here, right? So we know that we had this here, and let me give you guys another thing that we had there. You guys remember when I said on QQ, we also had tapped the 50% on QQ. We also have tapped the 50% on SPY, as you guys see here, right? And we retested the previous day low. So we knew that we broke below the 15-minute low I had marked down right here, right? You can see it on QQ Cleaner. We had this 15-minute low here. If we break below this, we're bearish. So what do I do? My fibs from my high to my low, right? I took it from the 5-minute here. From my high to my low, we retested the 50%, right? And then we know that SPY retested the previous day low, but we knew that we already had a close below the previous day low. So this was just a retest of break, simple support and resistance, right? Simple support and resistance. Old support turns into new what? I'll say it one more time. Old support turns into new what? Resistance, right? Okay, cool. Let's go back to NQ. Okay, so then we go back here, right? Okay, 5 minutes bullish, 15 minutes bullish. So we're scared here, right? We're like, ah, shit. Should we short it though? But we know SPY, QQ gave us the answer. So now we just wait for a shift to this to downside in small time frame here. So what did I do here, right? And this is how you identify your risk to reward. Okay, so for me, we knew that this was my last down move that did what? Above this high. This is my last down move that did what? Here. That we broke to the upside. So, right? That's a market structure shift. So, I now have a new what? I'll have a new low at this point, right? Now, this is where it gets tricky. A lot of you guys, and just answer this with 1. Is this my low here? 1 if yes, 2 if no. 2. Okay. Good job. Remember, the break of that candle, it can't be that lower than, excuse me. Sorry, I had to sneeze. It can't be that same one, right? So in this instance, this is my low here, right? This is my low here, and this is the lowest point before we broke above. Why am I not using this one? Because this is lower than this one here, and this is the candle that caused the break. Does everyone understand that? Thank you. Does everyone understand that? Yes. Okay, cool. So then I know that we did break below. This is my high here. So when people ask, hey, what's your stop loss? I still give the level when I said the level, but I say, if you guys go look at the alert, right? If you guys look at the alert, my mod typed it out. A 1 minute close above the high, which is this level here, right? So I look at candle closures. Now, why do I look at candle closures instead of wicks? Because look what happened here. It wicked. This was just to stop out people. So people panic, right? People are like, oh, fuck, we're heading higher. Let me stop out. And what happens? As soon as they stop out, what do? They dumped it. So why do I trade with closures instead of hard stops? For the same exact reason, because I focus on market structure. Market structure tells me whether I'm valid, whether I'm right or I'm wrong. If we shift back above, I'm completely wrong, and I'm okay if I'm wrong. Fuck it, I was wrong. But until we don't close above it, this is still a valid setup for me. That is why I don't set hard stops. Now, why did I set a hard stop at 24,250? The reason I set a hard stop here was because I knew this was my high here, and I said if they do decide to wick it, there's no way they should wick it 20 points above the stop loss level and wick it above the imbalance where we already have rejected, right? So for me, I was like, fuck it. If they push it to 50, I'm completely wrong, and they're gonna send this shit higher to the next draw liquidity for buy side, right? That's why I had a hard stop at 24,250. Now, why was it edging us? Why was I like, damn, this sucks here? Because we wicked it, but we didn't close above. What happened? Rejected. Okay. And then what happened when it broke the previous low that continued higher? What happened? As soon as this low happened here, what happened? We broke, and then what? Old support turned to what? Old support turned to new what? Resistance. Simple as that, and then we just write it down. Okay, so in this instance here, where was my entry? Was 24,153. Now will I say that I jumped the gun here? I don't want to say no. I don't want to say I jumped the gun, because to me it looked like a momentum trade. 1, because we retested the 30-minute gap. 2, because we retested the 4-hour gap. So for me, it was like, okay, ES, NQ, they both shifted down. This can just be momentum. That's why I filled at 52, because I saw that, okay, we had just broke. I was like, damn, we're going to continue lower to the next low with momentum. Could I have waited for a retest with the 4 steps again, right? If I would have had waited for, let's take it from the high to the low, I could have waited and got in the premium, and then my risk to reward would have been very, very minimal if I would have gotten in at the premium and stopped out here and then take profit here. That's a 1 to 9 risk to reward. Now that's a perfect setup, but in real time, it's hard for you to be like, it's hard to really, I don't want to say it's hard to wait for the retest, because we always do, but there's times where you need to be able to read the price action, read the momentum, and read the sentiment. So for me, the sentiment was bearish here, and that was like the momentum should kick into the downside. But we instantly got to push up. Now, I know that some of you guys were scared, and this is a scary candle, but one thing I told you guys this whole week, this whole month, this whole past couple months, we are in massive ranges. What can we control? Only control what we can control. Now, what is that? Sizing, right? So why would you want to go in with 1, 2 NQ contracts or 10 MNQ, 5 MNQ if you know your high is here, 24,231, and your low is here? That's 200 points. Why would you want to oversize yourself? It doesn't make sense. So that is why I said, if it breaks a low, I'll scale in and continue, right? So what happened? We got in, even though we got in at 52, 53, whatever it was, here, right? My risk was here, and if I'm focusing on the larger time frame, I was gonna target the overnight lows, which was 730 here. The overnight lows. That's what I was targeting. That is still a 1-to-1, 1-to-1.2, right? But off a larger time frame, because the 4-hour had already broke, and I knew if we broke on the 4-hour inside daily, we were just going to continue into the next draw, sell side liquidity here and the weekly open. So that's why I held those puts all day. Instead of holding my sells, I held the puts because we wanted to target the larger time frame. We also had this data news gap here, right? But it's just being able to identify your risk to reward is knowing where your high and lows is at. Do you guys see how simple it is? Just knowing your highs and lows as your take profit and stop losses. So even if you go on your 5-minute, okay, you know that this is your next low on the 5-minute. So that tells you that's your next what? That's your next what? TP, right? TP. Yep, that's your next TP. Good job, right? Because that's your next low. That's your next draw liquidity. So as simple as that. Don't overcomplicate it. Don't question it. Don't overthink. Where is my take profit? So no one should be asking from now on, hey, what's my take profit? What's my stop loss? If you saw that a market structure shift happened to the downside and it retests like this, you know this is your risk, and you know that the first TP is that low that pushed you up, and then the next TP is going to be whatever lows it's lower here to your left side. Does that make sense, guys? And all, yeah, you have to respect your stop loss. So that's why I said, that's why I had a hard stop, because like, fuck, if I get stopped, fuck it, I get stopped, I'm wrong. If it goes 250, I was like, I'm completely wrong. Like, I'm wrong. Oh well, oh fucking well. The first loss out of the whole month, and I'll be okay. But thankfully we didn't, right? But that is how you identify your risk to reward. But you gotta remember, and you gotta think, why haven't we missed all month? Why have we been so disciplined and so consistent? Because we're waiting for everything to match. We're not just, there's people that just want to hit, like, could I have just smacked it here at the first tap? Yeah, but why would I do that if I know the 5 and 15 minute are bullish? At that point, I'm just getting lucky, and then it feeds a high to me, and then I'm gonna try to do it again and again, and I'm just gonna fail and fail. Compared to having a strategy that works time and time again, I just follow my rules, follow my strategy, and do it over and over and over again and again and again. And it's something you guys need to get good at. You need to be okay to sit on your hands till the setup comes to you. The setup needs to come to you guys. You don't go to the setup. It's like, you guys ever watch fucking Tom and Jerry, right? Like, they set each other up, whatever. Like, that's how it is here. The market, it's literally trying to trap us. Why? Because the market feeds and makes money off of us. We need to, play against them. We need to see where the traps are at. It's like a fucking landmine in this field or whatever. Like, we need to know where that's at, and we need to know where not to step. Does that make sense? So that is your job as a trader, is to be disciplined and to be patient and to have a strategy and an edge against the market. Now, are we going to win 100% of the time? Fuck no. If not, we'd be fucking multi-millionaires, right? But we are very consistent. We make hundreds of thousands of dollars a year. Like, we are good at what we fucking do. That's something you guys have to remember, and just keep telling yourself, I'm patient, I'm disciplined. I'm patient, I'm disciplined. I see a lot of you guys trying to smack the bottom. Like, Brandon all day was talking about, I'm along here when it gets a little... Bro's trying to long just because it was selling off all day. Like, how does that make sense? Like, it doesn't make sense. You're going to fight something that's clearly telling you, I want lower. I want lower. Those are things you guys have to think of. And you guys need to stop filling up the chat with shit like that, because you're only, putting bad examples to new folks. You're only setting yourself up for failure, realistically. But that is risk management. That is a simple literally class of how to identify your risk to reward. Knowing your highs and lows, identify what, guys? Knowing your highs and lows, identify what for you? What two things does that identify for you? Your stop loss and take profit range, exactly. Market structure, take profit, and stop loss.